Okay, so you've decided to delve into the world of stock picking. Naturally, you venture online to do some digging for some investment ideas. And as your research continues, a familiar phrase keeps popping up in your research. It's all about the fundamentals. But what does that mean exactly? The last person you heard stressing the fundamentals was your high school gym teacher criticizing your jump shot. Thankfully, that's not it. When investors talk about fundamentals, they're usually referring to the metrics they use to gauge whether a stock is priced fairly or its intrinsic value. Those metrics are often quantitative, meaning they can be expressed as numbers, but they can also be qualitative, factors that are meaningful but tough to objectively measure. Some investors believe these fundamental metrics can be used to estimate a more accurate price for a stock than the market rate. This approach is called fundamental analysis. By running a fundamental analysis, investors are aiming to avoid overpaying for stocks and instead snap up others at a discount. Or, to echo another familiar investing phrase, buy low, sell high. Now, this sort of detailed analysis may not be for everyone. Some investors prefer to let financial professionals manage their money. Others lean on recommendations from stock analysts, like the ones you find in WebBroker. But if you're up for some number crunching of your own because you're aiming to become a more informed investor, then this course can help you out. First, we'll help you understand how to read an income, balance, and cash flow statement. Then, we'll run through some common financial ratios that investors can use when valuing stocks. Lastly, we'll show you how they all come together to form the basis of a stock valuation. So, ready to dive into the world of financial analysis? Then let's begin.